Let's bring in our first guest for the day. We've got Manish Singh, who's a Chief Investment Officer at Crossbridge Capital. Thank you so much, Manish, for taking the time. Appreciate it.
Hi, Alex.
Let's talk about the context, which is you have the war that's ongoing in Ukraine. You have monetary authorities that have met, that are meeting in the near term, with rising inflation a cause for concern, and at the same time the worry that growth is not going to be as strong as it was previously thought it would be. So where do we stand in terms of equities? Where do we stand in terms of bond yields?
So I would say that, if you look at the, rightly as you point out, the growth expectations have shifted down. If you see what the Atlanta Fed forecast is saying about US growth rate, just a few days ago, they were forecasting 0% growth rate in Q1. I haven't seen today what the update is, but it just tells you that the forward-looking growth rate is being hurt as the consumers are being hurt. But again, the focus more, in my opinion, has been on Fed. And the Fed is set to increase rates next week when they meet on 15th and 16th. Energy prices obviously has caused concern. You had the CPI number yesterday, which came at 7.9%, which was higher than 7.5% a month ago, but not as high as some people were expecting at 8 or over. So that gives you a pause and a thought that maybe the weakening of consumption will become a factor, and you will see some turnaround in the CPI number, the inflation numbers. One has to bear in mind that if you see the forward curve of commodities, especially oil, we're talking about energy here, they are much lower. I mean, the backwardation is quite high, quite severe if you see. And by backwardation, I mean the oil prices 3 months, 6 months down the line compared to the spot price now, those are lower by a big margin compared to what you have seen in the traditional market settings. So that again tells you that the consumption is getting hit, and oil price rally or oil price increase is not sustainable. Of course, if we keep going with the sanctions are going to get severe and there'll be ban on Russian oil usage by other countries, then of course the oil price is not going to come down. But it's encouraging to see the news that you mentioned at the start of the program from Russia or Putin. I think that's encouraging. So let's hope that plays the part. Fed rate rise is going to happen, or at least the first one, and then we see where we go from here. So my view is that if you look at historically how things work out, usually the market bottoms after the first rate hike. It doesn't mean that you have an immediate rally going forward, which starts just after the first rate hike, but usually the market bottoms after the first rate hike, and then gradually it keeps on getting better. And I think that pattern is going to repeat this time as well. So I feel very comfortable with the market.
Okay, just a follow-up to that though, Manish, from the perspective of us sitting here in India, we've seen frenetic selling by foreign institutional investors. Does the risk-off sentiment continue for foreign institutional investors, not just from the perspective of India, but emerging markets as a whole? Do you see that flight of capital continue?
I don't think so. Again, I heard what you said in the program right at the beginning, that some of these people were forced seller. Now, if they're forced seller because they had to meet margin calls or whatever their committee requirements, we can't comment on that. And I think that this is where the maturity of Indian market is still not there. People end up selling good assets because they're forced by the committee or rules or whatever is in place. But if you see the outlook, I mean, we are already at energy prices at a very high level. I strongly do not believe, I believe very strongly rather, that the energy prices just cannot continue to be this high. So if this is the situation and you expect, let's say, the energy prices go down, that should be positive if you're holding Indian equities or you're holding emerging market equities. The dollar has been quite strong. So any easing of tension and any risk on that comes through will clearly lead to a weaker dollar, and that should also be positive. So I just do not see how you could be bearish or you could be selling more of the emerging market or India in particular when the risk on sentiment catches up, which I believe we will be in very short time.
Thank you so much for joining in and for putting all of that into perspective. Pleasure speaking with you.
Thank you.